half the population. We earn, we save, and we endure. But the question is, do we invest? Finance has traditionally been assumed to be the man's gambit. Women fiddle and save, but seldom invest. Money Matters for Her is an initiative by mutual fund Sahi Hai to initiate a conversation with women and money and their thoughts around it. We welcome women pioneers from the world of finance to discuss their journeys and the importance of investment today. Because we really believe that women listen when women talk. We welcome Swati Kulkarni, the Executive Vice President and Fund Manager at UTI AMC, in today's session of Money Matters for Her. She is a veteran in the field of finance. She has been associated with one of India's largest asset management houses for over 25 years now. She is a woman of grit who made her way through the challenges of time, and well, as we all know, she has succeeded. She truly managed to break many glass ceilings to become who she is today. Ladies and gentlemen, let's welcome Swati. Swati, thank you so much for joining us at Money Matters
Thank you,
for Her.
Zinia.
We are absolutely thrilled to have this conversation. And Swati, I want to start, I want to rewind a little bit and start by asking you that you made it really big in the world of finance in a day and age where women would not even consider it as a career option. Can you tell us what steered you towards the finance industry? Can you take us through the journey of, the initiation of Swati in the world of finance?
So, I'm the first one in my extended family to have chosen finance. My dad was an electrical engineer from COEP College of Pune, and mom was a homemaker. And my younger brothers, they were inclined to follow the footsteps of my dad. In fact, I let go my admission after 10th for science and chose commerce over that because I wanted to pursue my interest in sports.
Wow.
And my parents allowed me to follow my passion with one condition: marks ठीक ठाक होने चाहिए. You should not compromise on marks.
Fair.
So I just went into that. And, I was like, my mom had a difficult past before marriage. She couldn't complete her graduation. My father supported her post their marriage.
Right.
And she completed her graduation, but she couldn't take up a job because, obviously there was no support. And my dad had a travel schedule always. So here she was after me that you take articleship, become a CA, have a good job. And that's what she felt because she strongly believed that women with good education have respect. And, family also considers them in financial decisions that the family takes. But I was totally freaking out and I was engrossed so much. And I used to play volleyball. I represented university. That the turning point came when my captain, once while we were returning from a game, she said कि ये खेल will कितने साल तक, how many years you will play, you have to, all of us will have to think of career. And that was a turning point. Fortunately, it wasn't too late. So, I finished my BCom in good percentages, like I was among the toppers. Took admission in Masters in Financial Management in Nursi Monji, and I had a fortune to learn financial management under Professor Mankekar, who is well regarded, great investors himself, and he has been guru for many. And in his class, I gathered that stock market is all good for equity investors or the investors, and it can be dangerous for the traders. And I think that is what kind of ignited my desire to look at equity as investment as a profession. But as things would happen, I didn't get into mutual fund at one go. I was 1 year in corporate finance in Reliance. And it so happened that my dad had invested in 1986 in one of the, the top fund, diversified equity fund. The only fund which was launched then happened to be from UTI. And I saw, while I completed my management education, I saw NAV growing, and that kind of drove me to mutual fund. And here I am After joining UTI, initially I spent time in research and planning, but then after 5-6 years, I landed up in fund management. So that's the journey, not decided initially, but I think I got those steps in time, and I could get into this profession.
What a beautiful journey. How you, at every step of the way, met someone who sort of, you know, you helped you gravitate towards finance, and here you are today. So, Swati, like you were, rightly saying, हम औरतें जो हैं, we save diligently, especially in our country, right? But we don't necessarily make investment decisions. We usually tend to rely on our father, then our brother, or maybe our spouse to make those investment decisions. Or generally, our savings would, be invested in buying gold, or will just be stacked up in the Almira. How would you nudge these women to take these savings and to invest their money?
So, Zinnia, most of us women actually run income and expenditure for our families, right?
Yes.
Monthly budget is in our hands, and we know what are our source of funds and what is the where we are spending, right? So, I think the first thing that who is in charge of, she's already in charge, we like a woman is already in charge of finances. First thing she can do is start investing through systematic investment plans. SIPs have been becoming very popular. We have seen how the number has gone up in recent past to about 12,000 crores a month. Yes. So, first thing is that by controlling expenses, she has to do that. And I guess the next step that she must take is that plan for the future. Because I think what she is missing is that everybody in the family and she herself has aspirations. And it's always the case that your aspirations are much more than your current resources. True. So you, in case you want to achieve those aspirations, you need to plan for future, right? First step, second step is that. And the other thing what I have seen is that risk can come from anywhere. And pandemic, we have seen how risk affected many families in terms of the income levels or in terms of course, the human life also. Yes. So I guess it is very important that women are thinking about these probable risks. There are personal difficulties like divorce or in terms of loss of earning member in the family. So like in portfolio management, we can't predict, but we stay prepared by position sizing. I think here also it will be a great idea for women to, one, for aspiring, they need to have allocation of their savings, and that is what the journey of investment, to inflation beating returns, so that they have corpus to fulfill their dreams as they maybe in the long term, but at least there is a step taken for that. And also to live a less worrisome life in terms of if there are any mishaps. So I think these are the two things which she must follow.
Wow, that gives a lot of clarity. I'm going to take a cue from what you just said. And clearly, in your career and in your life, you would have experienced so many market cycles and a lot of volatility every now and then. What would you tell to a woman investor who hesitates to invest because of the fear of losing her hard-earned money?
I think I'll start with a very good example. Of course, it's an unfortunate incident close to my heart. My close friend, actually, she just graduated, did her post-graduation, she was married, and her husband was doing very well in whatever he was set out to. But unfortunately, he expired. And here she was with an infant, baby, parent support, and of course his insurance proceeds. Now, this was an unforeseen thing, but she had her father's support, and he said for her short-term needs, he will take care and suggest something which can help her for future, next 10-20 years. And he was instrumental in giving her a suggestion to put 95% of her insurance proceeds into equity mutual fund. Wow. In last 8 years, she has seen that growing very well, and now she has a much peace of mind. So I think this is what the fear of losing money can be dealt with one, of course, that once you have a systematic investment plan, you would be also averaging your investment. So even if, let's say, you start investing and the markets have corrected, you tend to get much higher units when you invest the same amount. And another thing is, I think it has to be also in proportion of what your income growth also. So you can't just, if you've started with, let's say, 10,000 rupees today, that's what you can save. If your income levels have grown, it has to be actually increased in proportion of income. That is one thing. Second is, you talked about volatility. Now, the best thing of dealing with volatility is have a time horizon which is flexible and a long-term time horizon. Now, I'll give you some data. We have seen in past, if somebody, Sensex behavior also in last 15 years, if one had 10 years investment horizon and one would have invested every month. Now, you generate such observations. Now, 100% of the time, the investments for 10 years have resulted into positive return.
True.
And more than 85 to 90% of the time, these returns have been more than 8%. So, I think time is the most important thing to deal with the volatility market. And, you mentioned about I'm being there for 25 years. So naturally, I have seen many bull and bear phases of the market.
Yes.
Starting, I think the oldest I remember is .com bubble.
Right.
In 2000, then you had in 2007, of course, global financial crisis. 2013 was QE tapering. Every time, and the latest was pandemic. Every time the markets have corrected more than 25%. But the investors who could sustain those pains and understood that every correction brings the valuation of the market, equity markets, lower and acceptable to you, right, they have definitely ended up with gains over next 3 and 5 years. So I think this is what you need to understand, women need to understand, that if you have time with you and you have the ability to put one more additional year, if that year where your SIP, let's say a 5-year SIP ends in, for somebody, ended in March 2020. But if that person had an ability to pull through another year, the returns became more than 17-18%. So I think these are some of the simple things to conquer this fear of losing.
I think you've just put it so beautifully. Throughout all our conversations at Money Matters for Her, one thing that comes up time and again is patience. But you've put it in the absolute right context. It's not just patience, but it's, gradually building your appetite, something that I'm learning personally myself here as an investor. I want to talk about another aspect of investing, inflation. Inflation has been a hindrance in my experience of managing money. Be it my car, be it the fridge, be it, it has gone all the way to my Almira. There is literally no part of my life and our lives which has been untouched by inflation. What would you suggest to an investor? How could we tackle inflation?
So for the time being, I'll set aside how a moderate inflation is good for equity, investment, because typically if the companies have been able to pass on that inflation, that means they are having that much growth in their revenues and therefore growth in the profit.
True.
But when it comes to personal finance, definitely it is a bad, I would say, the bad man in the
yes,
in the room, because let's say, take an example, 1 lakh, a thing which is costing you 1 lakh today.
Right.
If you happen to postpone your purchase of that because of lack of resources, that 1 lakh cost is going to increase. Let's say 5% is the expected inflation. That is most likely will be available 5 years down the line at 1,27,000.
True.
So inflation has an impact of increasing the cost, and it has a negative impact on your savings, because it eats into your savings particularly. Correct. And a negative impact on the wealth generation. So the best thing to deal with inflation is through asset allocation that is suitable for you, and typically you should include inflation beating returns giving assets into your asset allocation, and that's about equity mutual fund allocation.
Okay, fantastic. Let's talk about one very positive attribute of women, which is that we're more disciplined and we're more careful while investing, especially, when it comes to money matters. Do you think that this kind of behavior benefits us while investing?
Yes, I think so. And I think in addition to that, the patience that we have, and typically once we get confident, the kind of focus that we depict is definitely a benefit while it comes to investing.
That's beautifully said. Okay, my next question is, how would you advise women investors to manage market volatility, inflation, more importantly, asset allocation that you just spoke about?
Yeah, sure. So, all of us go through different experiences in life, and the way we react to things, given, let's say, a correction in the market or any negative things, could be different. Again, our financial background, our upbringing has an impact on the way we take decisions. So,
True.
therefore, it is not one solution for all. It has to be a, there is a famous saying, and again, this is Morgan Housel has talked about it, that as far as personal finance, there is not, finance is not much, but it is more personal. So therefore the solutions have to be customized for investors. So I would say that, let's say, take example of two women. Now, one would, after correction, she might see that the experience has been bad and she may not invest at all. Whereas the other one who has done some bit of, she has got involved in the decision makings and she is trying to understand the whole investment gambit, she perhaps might think that the correction is good for her because she is able to now invest at a much better valuations. So, perhaps she might just take correction as an opportunity because she has time with her, because she's not bothered about whether मैंने invest करने के बाद और गिरे तो क्या prices. So that is very important part. And I think what she can do to handle these kind of thoughts is get a financial planner, understand what is a good asset allocation for you. And let's say if that financial planner suggests 60% allocation for equity and the markets have run up, let's say markets have gone up 30%. Now that equity allocation of hers has crossed 75% just because the markets have gone up. But given her risk tolerance and her risk return, profile, 60% is good for her. Then what she should do is she should actually reduce by taking profits into equity mutual funds, reduce back to 60%, so that if there is a correction, her 75% of the portfolio is not exposed to equity market correction. Only 60% is exposed, for which she is okay. She has accepted that as her tolerance level. So I think these things are very important when it comes to asset allocation. And there's no harm in taking guidance to understand and get little more interested in the whole subject. There's nothing difficult as far as these things are concerned. And I'll tell you one more thing, which, when it is mutual funds, there's a plethora of products is one complaint that we get. Now, you have to just understand that for all your short-term needs, you can look at fixed income products, short-term income products, and for the inflation beating returns, which I was talking about, look at equity products. Maybe start with an index funds or a diversified large cap funds or a flexi cap fund to start with. And as you get evolved and you know about the mutual funds, then you could perhaps look at more, sector specific or a thematic products or mid cap funds. And that's how your journey can be much more step by step and much more evolved, I would say.
Wow, you've just added a very fresh perspective. Swati, there is a tendency of panic during market volatility times. Most often than not, this is the time when investors will quickly withdraw their money without a second thought. What would you say to these investors?
So I'll narrate an incident in the book Psychology of Money by Morgan Housel. He talks about a secretary who all her life did a secretarial work, and only thing what she did, is she used to save every month. Now, this lady, when she died at the age of 100, she left $7 million for the charity. Lady who was single, she had otherwise a hard life, but she just disciplined way she was investing. So that is one thing. And on the second, or the reverse of this was a similar incident which he quotes about an investment banker who lost everything in the 2007-8 global financial crisis and filed for bankruptcy in 2010. So in 2010, these instances, one from an astute investors, whereas the one from a very naive person. So the naive person could beat the person who is so much evolved in investors. So again, the time is what can be a competitive edge for investors to deal with investing, and they can generate superior returns.
Wow.
So when you read such books, you try to relate whether there are examples. So I think this is what can be a great example to deal with the panic that typically sets in when the market corrects.
Yes,
So
absolutely.
I would actually ask our viewers to look for such examples. And today on YouTube you have so much of information. So these examples can give them that courage to stay invested for long term.
Yes, I think reading such stories about investors and staying a little ahead in your investing journey can make such a big difference. And of course, time is, like you said, the great equalizer. Tell me, have you successfully ever helped your immediate family invest? How did it go?
So, I had to be little smart about it. So and like many others would have done it, easiest thing was to put the gift money that children receive into a mutual fund. So since mom is there in the mutual fund, my kids were always were aware about the Sensex movement, and they used to often question me, why are you not happy when Sensex goes up? So I used to tell them that I have to look at what my fund is doing, what my peers are doing. They wouldn't understand that, but they started questioning what mutual fund does to our savings, and they started seeing that. So it was very easy for me to convert them into SIP when they started earning themselves. So I think that is one big thing which started with my family, I would say. And the other thing, of course, I couldn't convince my mom when she saw the markets were so volatile. She wanted to stay in a fixed income product. She is at 80 years. I think she has that kind of mindset. And, it is very difficult for her to convert into equity, but I am fine with 20% allocation that she is happy. She says she can take that much into equity. So I think that it depends on the individuals again.
Brilliant, absolutely brilliant. Swati, before I let you go, you've given us some extremely great examples, books, you've given us so many numbers. Now, I want to know, how does Swati invest? How do you evaluate investment options?
So first of all, I always go for a growth option, because I think that is the best option that we have, that enables you to compound your returns year after year. So that is one thing. Secondly, because I am working, and the kind of financial background that I have now, more than 80 to 85% of my allocation is into equity. Large part of it is into large cap and flexi cap structures. And again, I use the other products that are available as a satellite portion of the my own investment portfolio. Because I myself is a fund manager, we can't invest in stocks, and so that's most of it is in UTI's funds. So that's how my investment options are.
Brilliant, Swati. It was such a pleasure talking to you. And honestly, just listening to everything that you were telling me, I was thinking I'm sitting here with an encyclopedia of finance. But if you think we're done, we're actually not done yet. But with your permission, I would like to indulge you in a rapid fire, a quick fire round. Are you ready for it?
Am I going to get any hamper for that?
The hamper is just around the corner, but we have to get there to the hamper. Are you ready?
Sure, I am ready.
Okay, here we go. Money, movies, music, in your order of preference.
So now I can afford to say it is music, movies and then money, because I have made, I think, enough money for me. But if it's actually, unless there is a money, we can't think of two. Yeah.
True, absolutely.
Sure.
Swati, tell us, what's your favorite mutual fund feature and why?
So I mentioned about growth option, and we discuss about that. In addition to that, I would say the liquidity that mutual funds provide.
Yes.
We often as Indians, we invest more into gold and also the real estate. But when it comes to liquidating those and monetizing them, it becomes very difficult because, typically real estate is a seller's market. You don't have transparency. Here we have transparency also. So transparency is another feature which I like about mutual fund.
Your advice to women investors in 10 words.
So I would say start SIP.
Okay.
Then think about long term. Also think about equity allocation in your mutual fund portfolio.
Tell us a quote that has stuck with you.
So I mentioned to you about one quote which is I like, which is the personal finance is all about, less about finance and all about personal. Besides that, I would say in management perspective, I like stick to knitting is the quote from In Search of Excellence book by Tom Peters and Waterman. So there, why I like is that the businesses which tend to stick to their core competence, they tend to do much better. So that is one thing. And third quote, if you may permit me, is from Charlie Munger. He talks about, and that's very important for me in my investment, role and my investment style, is about, great businesses at fair price are far superior than fair businesses at great prices. So that is kind of engraved in my investment style as well.
Beautiful. स्वाति, ये बताइए, Saturday शाम को आप क्या करती है?
I'm trying my hands with painting now, so wow. I'm trying to learn. So most Saturday evenings go in that.
What's your favorite cuisine?
I'm a foodie, so I can't really separate out. Choose.
Like me. We want it all.
Yeah.
And why not, right?
Yeah, but I typically like namkeen much than the sweets.
Chatpata.
Yeah.
Okay, an investment mantra in 5 words.
Investment mantra in 5 words. I think we covered that in that 10 words, but
so those 10 words.
Yeah, I think they are
pick
good
your
enough.
Favorite 5 out of those 10 words, and that's your investment mantra. Your advice to millennials on YOLO and FOMO?
See, FOMO is, I can't really give advice because at times I also feel that FOMO. So I'll be actually dishonest if I say no. But I think one great advice that many of us have been giving is start investing early, because a person who starts at 25 versus the person who starts at 30 would have generated significantly different corpus when they retire. So this is one thing which millennials should do, that start investing as early as possible, and as you grow in your profession, increase that investment amount and use SIPs, because it doesn't bother you much. The noise level in the markets you can keep aside if you are using SIP, because every market corrections you are also adding to your investment.
Fantastic, Swati. What an incredible conversation this has been. I think you've been extremely inspiring, and your stories, they have been so powerful. I can surely say this on behalf of all of our audience. So thank you so much for joining us at Money Matters for
Thanks,
Her.
my pleasure, Zinnia.
And I think these sessions now have created a ripple in the society. They've started a conversation around women and investment. I'd like to thank our viewers for supporting us in our endeavor to inspire women to invest, not just save.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.